over half. More than half. Think about that for a second. In 2024, one company shipped over half of all the physical firewall units across the globe. It's got to be a big
That's not just a big slice of the pie. That's owning the whole bakery.
Wow. That's a powerful image. So which company are we talking about here?
The company we're diving deep into today is Fortinet.
Fortinet. Okay. Interesting. What makes them such a powerhouse in the cybersecurity world? What's the secret sauce?
That is the million-dollar question. And that's exactly what we're going to uncover for you today. We're going to try to peek under the hood and figure out what makes them tick.
Welcome, everyone, to this deep dive on Fortinet, ticker symbol FTNT for those following along at home.
Exactly. And for this deep dive, we're putting on our value investing hats, trying to really understand how this cybersecurity leader works, who's steering the ship, and what their financial picture looks like, the stuff that really matters at the end of the day.
Absolutely, the nuts and bolts, the foundation. Now, to bring you this understanding, we've gone through a ton of research, a pretty comprehensive document, and even looked at one of the recent ads to get a feel for their messaging.
Interesting. So we're getting a 360-degree view here.
Yeah, definitely trying to. Our goal is to extract the key insights about Fortinet, the things that really move the needle so you can grasp their strengths, see where they might be going in this crucial world of cybersecurity without getting lost in all the technical jargon.
I like it. Cutting through the noise, making it accessible.
Exactly. So let's jump right in. To start, let's get a handle on the core of what Fortinet actually does.
At their heart, their business revolves around something they call the Fortinet security fabric. It's a pretty cool concept. Think of it like a unified security system, seamlessly working across any kind of IT infrastructure you can imagine.
So whether you're talking about your office network or the cloud, it all fits under this fabric.
Precisely. Their mission, their big goal, is to secure people, devices, and data everywhere, no matter where they are.
Ambitious, Warren. It is. And they seem to have a product for just about everything under the sun when it comes to cybersecurity. What is it, over 50 different offerings?
You're not kidding. We're talking a massive range of enterprise-grade products. Their flagship, of course, is the FortiGate firewall, a real workhorse in the industry, but they don't stop there.
No, not at all. There are switches, wireless LAN access points, endpoint security software. I mean, you name it, they probably have it.
It's a truly broad portfolio, that's for sure.
Yeah.
And when we look at how they bring in the money, there are two main avenues. The first is, naturally, through product sales, the hardware and software itself.
The bread and butter.
Exactly. Interestingly, though, in the fourth quarter of 2024, they saw a pretty big jump, a 17.6% increase year over year. That brought in a cool $574.0 million.
Not bad at all. But I think we saw that for the whole year of 2024, product revenue actually dipped a little bit.
Yeah, you've got a sharp eye. For the full year, product revenue had a tiny decrease, just 1.0%, totaling $1.91 billion. But don't worry, there's a silver lining here. Their service side of the business. That's where the real growth story seems to be unfolding.
So it's not just about selling the initial product, it's about the ongoing support and services.
Bingo. Their service revenue, which includes things like continuous support and their increasingly popular AI-powered security services, that's been on a tear.
AI seems to be everywhere these days, right?
It really does, doesn't it? Anyway, in Q4 2024, their service revenue reached $1.09 billion, a solid 17.2% increase compared to the year before. And for the full year, they pulled in $4.05 billion in service revenue, a whopping 19.8% growth. I mean, those are some impressive numbers.
Wow. So they're really raking it in on the service side. I'm guessing that recurring revenue is becoming pretty crucial to their bottom line.
You're absolutely right. And here's a stat that really drives that home. In that same fourth quarter of 2024, services accounted for roughly 65% of their total revenue.
65%. Wow. That's a huge chunk of their income coming from services. So it's not just about the initial sale anymore. It's about building those long-term relationships and providing that ongoing value. Smart move on their part.
Totally agree. It's a classic shift towards a subscription model. Now, here's something that might surprise some people. All these different products, the firewalls, the switches, everything, they all operate using a single system called FortiOS.
FortiOS. So it's like the brains behind the operation.
Yep, it's their unified operating system. Think of it as the conductor of the orchestra, making sure everything works together harmoniously.
I get it. It's all about simplifying things for the customer, right? Easier management, better integration.
Exactly, streamlining the whole experience.
Mm.
Now, we've already touched on their dominance in the firewall market, shipping over half of all physical units in 2024.
Yeah, that's like king of the hill status right there. But how do they stack up in the broader cybersecurity market? Are they still the top dog?
Well, it's a bit more complex when you zoom out. According to Omdia, a research firm, in 2024, Palo Alto Networks actually led the network security market with a 28.4% share. Fortinet was right behind them in second place, though.
Okay, so there's definitely some strong competition out there.
Oh, absolutely. This is not a one-horse race. You've got heavy hitters like CrowdStrike, Cisco, Checkpoint, all vying for a piece of the pie. But when you look at the overall cybersecurity market, Fortinet held a respectable 7.0% share in the first quarter of 2023.
Not too shabby. But are they holding their own against these giants?
They're not just holding their own, they're actually growing quite rapidly. In that same period, their year-over-year growth rate was an impressive 26.2%. So they're definitely a force to be reckoned with.
It sounds like they're not resting on their laurels. They're pushing forward, gaining ground. Is there anything else we should know about their market position?
Oh, one more thing. As of the third quarter of 2024, they were ranked among the top 6 vendors in the CAE market. CAE stands for Secure Access Service Edge, which is a cloud-based security model that's gaining a lot of traction.
Ah, so they're also making moves in the cloud security space.
You bet. They're definitely not putting all their eggs in one basket. They're diversifying and trying to be a major player across the entire cybersecurity spectrum.
So they're a leader in a crucial area, firewalls, and they've got a strong and growing presence in the overall market, but they're facing some serious competition. It's a dynamic space for sure. Now let's shift gears a bit and talk about the people calling the shots, the folks at the helm. What can you tell us about Fortinet's management team?
Well, this is where it gets interesting. Fortinet was actually co-founded back in 2000 by 2 brothers, Ken and Michael Xie.
2 brothers, huh? That's pretty cool.
Yeah, and what's even more interesting is that they're both still actively involved in leadership after all these years.
That says something about their commitment to the company. You don't see that too often these days.
Definitely not. And it can bring a real sense of continuity and long-term vision, having the founders still at the wheel. So Ken Xie, he's the big cheese, right? The CEO.
That's right. Ken Xie is still very much at the helm.
He's more than just the CEO. He's the founder, chairman, and CEO. Talk about wearing multiple hats. He's a real legend in the cybersecurity world. He also founded NetScreen Technologies, a very successful company that was acquired by Juniper Networks.
Wow, so he's got a proven track record.
Yeah, you could say that.
Yeah.
He brings over 25 years of experience to the table, and his whole philosophy is centered around baking security into every layer of IT infrastructure. It's like security is in his DNA.
Makes sense. And what about his brother, Michael? What role does he play?
Michael Xie is the co-founder, and he's the president and CTO, Chief Technology Officer.
So he's the tech brains of the operation.
Pretty much. He's got over 15 years of experience specifically in network security, and his main focus has been on the technological innovation within the company. Pushing the boundaries, coming up with new solutions. Having both brothers so deeply involved for over 2 decades, that's pretty remarkable.
It really is. It shows a level of dedication and passion you don't always see.
Speaking of changes, I think there was a recent shift in the CFO position.
Oh, yeah, that's right. There was a transition in the chief financial officer role. Nancy Bush was the interim CFO, and now Andrew Delmato is the permanent CFO. Transitions like this are always worth keeping an eye on, but overall, Fortinet has maintained a pretty stable and experienced leadership team.
It sounds like they know what they're doing.
Yeah.
And their performance since going public in 2009 really backs that up. Consistent revenue and earnings growth, that's not easy to achieve.
Nope, it definitely isn't. And they seem to be very proactive when it comes to security, too. They're constantly working to identify and address vulnerabilities, keeping their customers in the loop, which is super important in this industry. Trust is a big factor. Absolutely. You got to stay ahead of the bad guys, and you got to be transparent with your customers.
Exactly. And it's not just about the technology for them. They also place a big emphasis on ethical standards in their software development, have anti-corruption policies in place, and even factor sustainability into their operations.
So they're trying to be a responsible company on multiple fronts. That's good to see.
Yeah, it's refreshing. There's a broader commitment to ethical practices. It builds trust with stakeholders, investors, customers, everyone. It definitely contributes to their long-term success.
Absolutely. And from what I've read, Ken Xie seems to have a very balanced approach to the future of cybersecurity, focusing on both cloud and hardware solutions.
Yeah, he's got a good vision, a realistic view of where the industry is heading. He recognizes that the world is moving to the cloud, but hardware is not going away anytime soon.
Yeah.
So you got to have a foot in both camps.
Smart. All right, let's get down to brass tacks now. Let's talk money. What can you tell us about the financial health of Fortinet?
Financially, they seem to be in pretty good shape. Their market cap is currently sitting at around $74.33 billion. And when we look at their valuation using price-to-earnings ratios, things get a bit more interesting.
Yeah, PE ratios can be tricky, right?
They can be. So their trailing 12-month PE, or TTM PE, is about 42.59. And their forward-looking PE is even higher, around 58.79x.
That's quite a difference. Can you break that down for us?
Sure, the TTM PE is based on their past earnings, while the forward PE is based on projections of their future earnings. The fact that their forward PE is higher suggests that the market expects their earnings to continue growing. People are betting on their future.
Interesting. So good past performance, but even higher expectations for the future.
Exactly. And we've already discussed their impressive revenue growth in 2024, mostly driven by their services segment. In the fourth quarter of 2024, total revenue hit $1.66 billion, a healthy 17.3% jump compared to the year before. And for the full year, total revenue reached $5.96 billion, a 12.3% increase.
And their service revenue growth was even more impressive, wasn't it? Nearly 20% for the full year.
Yeah, you got it. Service revenue was a real bright spot. But there's an interesting wrinkle here. Product revenue, which had dipped a bit for the full year, actually rebounded significantly in Q4, growing by 17.6%.
So maybe there's still some life left in the hardware side of the business.
It's possible. It'll be interesting to see if that trend continues. Now, profitability is key for any company, right?
Absolutely. You can have all the revenue in the world, but if you're not making a profit, it's all for nothing.
Couldn't agree more. And Fortinet, well, they're doing quite well on that front. Their profit margins are very strong. In fact, they had record GAAP and non-GAAP operating margins in 2024.
GAAP and non-GAAP. Can you remind us what those mean?
Of course. GAAP stands for Generally Accepted Accounting Principles. It's the standard set of accounting rules used in the U.S. Non-GAAP is basically anything that doesn't follow those strict rules. Companies often use non-GAAP measures to exclude certain expenses that they consider one-time or unusual, giving a clearer picture of their ongoing profitability. So Fortinet's GAAP operating margin was 34.6% in Q4 and 30.3% for the full year. Their non-GAAP operating margins were even higher, hitting 39.2% in Q4 and 35.0% for the whole year. Those are some seriously impressive margins.
Yeah, those are fat margins. Any other profitability metrics we should look at?
Oh yeah, there's more. Their gross profit margin over the last 12 months was a whopping 80.56%, and their net profit margin was a very solid 29.30%. These numbers tell us they're running a very efficient and profitable operation.
All signs point to a very healthy business. But what about debt? I remember we saw some inconsistencies in the reported debt-to-equity ratios.
Yes. That was a bit of a head-scratcher. We found different figures for their debt-to-equity ratio, numbers like 71.86%, 0.67, even 4.24. It was all over the map.
That's a pretty wide range. What's the reason for that discrepancy?
It could be a few things. Different reporting methods, different time frames being considered. It can get pretty complicated. But one report we dug up showed their total debt at $1.07 billion compared to total equity of $1.49 billion.
So they do have debt, but it doesn't seem excessive based on that particular snapshot.
Right. It's not setting off alarm bells, but it's something that investors would definitely want to look into more deeply, get the full picture.
Always a good idea to do your due diligence, but at least their cash flow generation seems to be pretty robust.
Oh yeah, no worries there. They generated a ton of cash in 2024. Free cash flow, which is the cash left over after all the essential spending, was $1.88 billion. That's a free cash flow margin of 31.5%. And their cash flow from operations for the year was even higher, $2.26 billion.
That's a lot of cash coming in. What can they do with all that cash?
That's the beauty of it. It gives them a lot of options. They can invest in research and development, maybe make some acquisitions, buy back their own stock, or pay dividends to their shareholders. It's a good problem to have.
It certainly is. Now, before we jump into the second half of this deep dive, where we'll be talking about market sentiment, ownership structure, and risk assessment, we want to tell you about a fantastic resource that can help you with your own investment research.
Sounds good. Always looking for an edge.
Imagine this. You're researching a stock. and you can instantly generate a detailed report on that company. Not just any report, but one tailored to your level of financial knowledge.
Wait, so you can choose how deep you want to dive into the analysis?
Yes. And you can even choose the format of the report. Want a traditional written document? No problem. Prefer a podcast-style breakdown, something you can listen to on the go? Got it. Or maybe a video analysis with charts and graphs. They've got that too.
That's incredible. So much flexibility.
And it gets even better. They're also building an interactive platform where you can ask specific questions about any stock, and their AI-powered system will provide you with answers and insights.
Wow, that's taking things to a whole new level. What about finding new investment ideas? Can this platform help with that?
Absolutely. They have a voice-controlled stock screener that lets you filter stocks based on your criteria. You can literally say, show me stocks with a PE ratio below 20 and a dividend yield above 3%, and boom, you've got a list of potential investments.
That's amazing. It's like having a personal financial analyst at your fingertips.
And they've even got tools to analyze your existing portfolio. You can see its overall risk level, identify potential weaknesses, and get recommendations on how to improve it. The platform is called stockanalytics.ai. They're revolutionizing the way people invest.
I got to check this out. Where can we learn more?
Just head over to stockanalytics.ai and you can see a demo of the platform. They've also opened up a waiting list for beta users. Early signups get some pretty sweet perks.
Perks? Like what?
50% discounts, and even opportunities to invest in the company itself in the future of financial intelligence. So, if you're serious about investing, stockanalytics.ai is definitely worth a look.
Thanks for the heads up. I'm definitely going to check them out.
All right, let's get back to our deep dive on Fortinet. We've covered their business, their management, their financials. Now let's see what the rest of the market thinks about them.
The court of public opinion. Always interesting to see what the sentiment is.
Exactly. What's the buzz surrounding Fortinet right now?
Well, the overall feeling is generally positive, but there are some mixed signals, so it's not a clear-cut case. Fortinet is set to announce their first quarter 2025 results on May 7th, 2025. So that'll be a big moment, you know.
Yeah, those earnings calls can really move the stock. Give us a sense of whether they're meeting expectations or not. Any whispers from analysts leading up to that?
Yeah, there's been some recent coverage. Stevens & Co. initiated coverage with an equal weight rating. That's basically like a neutral stance, not bullish, not bearish.
Okay, so they're sitting on the fence for now. But what about price targets? Are analysts generally optimistic about the stock's future potential?
The average one-year price target as of March 2025 was $117.27. Compared to its recent trading price, that indicates a potential upside for investors. But you got to look beyond just the price target, right?
What else should we be looking at?
The underlying projections for revenue and earnings per share, or EPS, analysts are currently expecting Fortinet to bring in about $7.497 billion in revenue for 2025. That's a huge jump, a 25.88% increase. And they're projecting non-GAAP earnings per share of $2.10.
Those are some big numbers. Analysts clearly think Fortinet is going to have a stellar year.
They do. But here's the catch. Those analyst projections are actually quite a bit higher than what Fortinet itself is guided for.
Really? So the company is being more cautious than the analysts?
Seems like it. Fortinet's own guidance for 2025 revenue is between $6.65 billion and $6.85 billion. And for non-GAAP EPS, they're guiding for $2.41 to $2.47.
Wow, that's a pretty big difference. Analysts are significantly more bullish than the company itself. What do you make of that?
It's a bit of a puzzle. Analysts might be factoring in more aggressive market growth, or maybe they think Fortinet is being too conservative in their projections. It's also possible that Fortinet is sandbagging a little bit, setting the bar low so they can beat expectations.
Makes sense. So it's a wait-and-see game. We'll get a better sense of things once those Q1 results are out and we see if they update their guidance.
Exactly. Actions speak louder than words. Speaking of actions, did you see what happened to their stock price after their Q4 2024 earnings were announced?
Yeah, it took a bit of a dip, didn't it? Was it because they missed expectations?
Initially, yeah, the stock price fell after they released their revenue forecast, which was below some analyst predictions. But get this, their actual reported results for both sales and adjusted earnings per share ended up exceeding analyst estimates.
So the market overreacted to the initial forecast.
That's what it looks like. The fundamentals were still strong, and the actual performance was quite good. It's a reminder that short-term market movements don't always reflect the long-term health of the company. And since then, we've actually seen some positive movement from analysts. Piper Sandler and KeyBank Capital Markets both upgraded the stock to overweight, with price targets of $120 and $115 respectively.
So those analysts are feeling pretty good about Fortinet's prospects. That's encouraging.
Definitely a vote of confidence. All right, we've talked about market sentiment. Let's move on to ownership. Who actually owns this company? What does Fortinet's ownership structure look like?
Yeah. Who are the big players? Who has the most influence?
Well, the sources we looked at didn't give us a super detailed breakdown of share ownership percentages, but we can make some educated guesses based on what we know. Remember how Fortinet was co-founded by Ken and Michael Xie, and they're both still running the show?
Yeah, that's pretty unusual, right? To have the founders still so heavily involved after all this time.
Exactly. It strongly suggests that they still own a significant chunk of the company. Founders who remain active in management typically hold on to a large portion of their equity. It shows they have skin in the game. They're aligned with the other shareholders.
It's reassuring to know that the people running the company have a vested interest in its success.
Absolutely. They're not just hired guns. They're the original builders, and they're still here guiding the ship. Now let's talk about risks and opportunities. What are some of the potential headwinds and tailwinds facing Fortinet?
Yeah, no company is perfect. Every business has its strengths and weaknesses. And in a dynamic industry like cybersecurity, things can change very quickly.
True that. So let's do a quick SWOT analysis. SWOT stands for strengths, weaknesses, opportunities, and threats. It's a classic way to assess a company's strategic position. What do you think are some of Fortinet's biggest strengths?
Well, they're clearly the dominant player in the physical firewall market. That's a huge advantage. They've got that segment locked down.
Yeah, their market share in firewalls is rock solid. That gives them a very stable revenue base to build upon. And their Fortinet security fabric, it's a really compelling offering. It provides a comprehensive suite of solutions, and customers seem to really like it.
It's all about that integrated approach to security, right? Having all your bases covered.
Exactly. And they've also got their own proprietary technology, FortiASIC. It's specifically designed to speed up security processing and make their products more efficient and powerful.
Yeah.
It's like having a secret weapon.
So they've got the market share, they've got the comprehensive solution, and they've got the cutting-edge technology. Sounds like a winning combination.
It does. And don't forget about their customer retention rate. It's around 97%.
97%. Wow. That means almost all their customers are sticking with them. That's a great sign.
It's phenomenal. It shows that they're doing something right. Customers are happy with their products and services, and their brand recognition is also very strong. Forbes ranked them as one of the most trusted companies, which is a big deal in this day and age.
Trust is everything in cybersecurity. People need to feel confident that their data is safe.
Absolutely. And last but not least, Fortinet is known for its competitive pricing, especially for small and medium-sized businesses. They're making enterprise-grade security accessible to a wider range of customers. It's a smart strategy.
Okay, so they've got a lot of things going for them. But what about weaknesses? No company is invincible, right? What are some potential areas where Fortinet could stumble?
Well, the cybersecurity industry is incredibly competitive and constantly evolving. You got to be on your toes all the time. There's always a new threat emerging, a new technology being developed.
So they can't afford to rest on their laurels. They have to keep innovating.
Exactly. And remember how we talked about the difference between analyst revenue projections and Fortinet's own guidance? That's something to watch closely. It creates uncertainty and could make some investors nervous.
If they don't meet those high expectations, the market could punish them.
That's the risk. And those inconsistencies in the reported debt-to-equity ratio, that's another potential weakness. It raises questions about their financial transparency and could make some investors hesitate. We also noticed a recent decrease in their share buyback activity.
Share buybacks, that's when a company buys back its own stock, right?
It's a way to return value to shareholders. When a company buys back its own shares, it reduces the number of shares outstanding, which can boost earnings per share and increase the value of the remaining shares. So when a company reduces its buyback activity, it can be a sign that they're less confident about their future prospects or that they need the cash for other purposes. It's something to keep an eye on.
Definitely. So strong competition, uncertainty about future growth, and some questions about their financial strategy. Those are some legitimate concerns. But let's flip the coin now. What are some of the big opportunities that Fortinet could capitalize on going forward?
Well, the overall cybersecurity market is booming. It's a massive market with huge growth potential. It's projected to grow at a compound annual growth rate of 12.9%. That's like a rising tide lifting all boats.
So even if they just maintain their current market share, they'll still benefit from that overall growth.
Exactly. But they're not just sitting back and riding the wave. They're actively pursuing new opportunities. One of the biggest trends in cybersecurity is the shift to the cloud. More and more companies are moving their data and applications to the cloud, which creates a whole new set of security challenges.
And Fortinet is well positioned to take advantage of that, right? With their
Yeah.
SANTI offerings and their cloud security expertise.
Right on. They're investing heavily in those areas, and it's starting to pay off. They're already a major player in the SaaS market, and they're only going to get stronger. Another huge opportunity is the rise of artificial intelligence and machine learning.
AI is everywhere these days, even in cybersecurity.
It's transforming the industry. AI and ML can analyze massive amounts of data, identify patterns, and detect threats much faster and more accurately than humans can. Fortinet is leveraging AI and ML to enhance their products and services, making them even more effective. And let's not forget about government spending on cybersecurity. Governments around the world are realizing that they need to beef up their cyber defenses, and they're willing to spend big money to do it.
So there's a huge potential market for Fortinet's solutions in the public sector as well.
Absolutely. They've got a proven track record, they've got the technology, and they've got the trust. They're in a great position to win those big government contracts.
It sounds like they've got a lot of irons in the fire. But let's not forget about the threats. What are some of the things that could derail Fortinet's success?
Well, the biggest threat is probably the constantly evolving nature of cyber attacks. The bad guys are always coming up with new ways to breach security systems, and Fortinet has to stay ahead of the curve. It's a never-ending arms race.
It's like playing whack-a-mole, right? As soon as you knock down one threat, another one pops up.
Exactly. It's a constant battle, and the competition is fierce. There are a lot of other big players in the cybersecurity market, and they're all hungry for market share.
So Fortinet can't afford to get complacent. They have to keep innovating and fighting for every customer.
No doubt about it. And the regulatory landscape is always changing. Governments are constantly introducing new laws and regulations around data privacy and security, and companies like Fortinet have to comply with all of them. It can be a real headache.
It's a lot to juggle. So to sum up, Fortinet has a lot of strengths, a lot of opportunities, but also some significant weaknesses and threats to contend with. It's a mixed bag, but overall, I'd say they're in a pretty good position.
I'd agree with that. They're a strong company with a solid track record, but they're not without their challenges.
Yeah.
Now, what was the overall investment recommendation from the research document we looked at?
Right. After all that analysis, all those numbers, they had to come to a conclusion.
Yeah, they landed on a hold recommendation for Fortinet.
Right.
Basically, they're saying it's a good company with attractive growth prospects, but the current market valuation and those data inconsistencies we talked about warrant a cautious approach. It's not a screaming buy, but it's not a sell either.
So hold your horses, do your own research, and see how things play out.
Exactly. It's all about weighing the potential rewards against the potential risks.
All right, folks, that brings us to the end of our deep dive on Fortinet. We've covered a lot of ground today, but we hope this has given you a better understanding of the company.